first of all, very good afternoon, everyone. And I thank you for joining the Q1 FY19 results conference call of Adlabs Entertainment Limited. At the outset, I'm glad to inform you that Imagica has reported highest ever EBITDA in Q1 FY19. It is an outcome of a strong team effort with one eye on new initiatives and the other on continuous cost efficiencies. From the market scenario, we witnessed a high amplification of advertising by other parks in Q1 in our region. In long run, we believe such efforts from all players will help the category grow and propel culture of outdoor recreation in India. Footfall for this quarter saw a growth of 2% YOY in parks business from 5.75 lakh in Q1 FY18 to 5.88 lakhs this quarter. With this, we are pleased to share that Imagica has crossed 7.4 million visitors in just a span of over 5 years. Our penetration thus stands at almost 17% of the primary catchment, which shows a large base yet to be penetrated and thus the immense opportunity that lay in front of us. Alongside, our repeat visitor base is increasing very steadily, and currently it is at 17 to 18%. This shows the satisfaction among the guests and the repeat worthiness of our category at Imagica. Total revenues for Q1 stands at rupees 84.73 crores vis-a-vis rupees 86.62 crores on a YOY basis, with parks at 75.63 crores and hotel at rupees 9.09 crores. This also has a drop of 3% on a YOY basis. It is primarily due to the change in tax regime from service tax to GST. The EBITDA for Q1 stands at rupees 34.13 crores versus rupees 32.23 crores in the corresponding quarter last year, thereby registering a growth of 6%. With margins improving to 40.3% from 37.2% on a YOY basis, this is, as stated, highest ever EBITDA margin since inception. We also have made a number of representations, as we have stated in the earlier calls, to state governments and are hopeful that the matter of refund of the said SGST component in lieu of previous entertainment tax exemption given to Imagica, now subsumed in GST, is resolved in the ensuing quarter. The mechanics of the state refund are being finalized by the state government, and it would flow into EBITDA as a refund item. Thus, we believe the EBITDA would improve by approximate rupees 4.5 crores for Q1 FY19. Considering the GST refund amount, the quarterly EBITDA margin would stand at 45.7% as the reported EBITDA margins. Now, moving on to key highlights and developments that took place in Q1 FY19. We saw continued footfall growth. The quarter saw continued footfall growth of 2% with water park growing by 5%. In fact, Imagica became the first water park in the country to offer a unique proposition of character parade for guests and thus increasing the entertainment value for them. On pricing and ARPU, we saw a 2% drop in ARPU this quarter versus the previous year. This was primarily due to the change in tax regime from service tax to GST. Non-ticketing revenues, however, continue to grow, and the share of non-ticketing revenues increased to 35% of overall revenues in this quarter from 33% last year, same time. On operational cost rationalization this quarter, we are glad to inform you that we have achieved a further 7% of cost reduction, and our intent and effort is to optimize the operating costs on a continual basis, and so far we have achieved an overall reduction of almost 25% in the operating cost from the peak cost that we incurred. From here on, cost efficiencies would obviously result in lower percentage numbers, and since major areas have been implemented, however, our efforts will continue to be there to drive the cost more efficient and lean. Moving on to Novotel Imagica, in Q1, Novotel Imagica's overall ARR stood at rupees 4,515, including F&B. The number is projected at 6,434 for the rooms, and F&B stood at 4,081. We saw good demand from corporate and MICE segments as well as social segment in this quarter. We are very glad to inform you that much awaited approvals have now been obtained for all 287 rooms. Benefit of the same will be available to us from September 1, 2018. Moving on to strategy for the year. As mentioned in the last earnings calls, in FY19 we would continue our efforts on adding new attractions and improving entertainment value that would help improve footfall as well as add into additional revenue streams. This will not only improve EBITDA margins but enhance possibilities of increased repeat visitations. In line with this approach, we have launched 3 new attractions and concepts, and let me tell you that within last 6 months we've added very interesting 3 new concepts. They are Chota Bheem, the character, and as we speak in the month of July, even the ride has been operational. So the quarter 3 will logically see benefits of the same. House of Stars, India's first official Bollywood concept, also has been operational. In fact, there will be some more enhancements that would take place, and by end of September, even that would be moving into a much higher standards of attraction. Moving on to Eye Illusion, which is India's first AR-enabled trick eye museum on global standards, has already been now operational. So these are 3 unique propositions that have been added to Imagica's stable. On future business strategies, we are glad to inform you that Imagica High Street, a unique non-ticketing initiative, has been soft launched in the last week of June. Q2 will see a major impetus to this initiative. We believe that this concept will propel consumption and reduce the entry barrier for Indian customers. This will also allow passerbys to take a break at Imagica and will enable us to convey theme park as a product granularly and in person. Further to this, it will help us upsell our product portfolio in a much better manner. Apart from the above, we are in talks with a few more potential partners to add interesting concepts in Imagica and make Imagica India's most favorite and most appreciated entertainment destination. With this, I would now like to hand over to Mr. Mayuresh Kore to discuss the financials of Q1 FY19 in detail. Thank you very much.
Thanks, Dimant, and good evening, everyone. Before I talk about results for Q1 FY19, I would like to inform you that today we will restrict our discussion on the Q1 financial results, and for any updates regarding asset sale and our debt management plans, we shall be updating in due course. I can, however, update that 2 of our lenders, including the lead bank, have given their NOC for the pending hotel sale, while the land NOC is still under process. Moving on to the details of the Q1 P&L, regarding footfall and ARPU, the footfalls achieved for Q1 FY19 are 5.88 lakhs versus 5.75 lakhs for Q1 FY18, and the breakup being as follows: a theme park 2.01 lakhs, water park 2.98 lakhs, and snow park 0.88 lakhs. Thus, the footfall for theme park and water park combined in Q1 FY19 grew by 2% YOY. The theme park and water park revenues combined stand at rupees 74.34 crores, the hotel at rupees 9.1 crore, and snow park at rupees 1.29 crore, and thus total revenues for Q1 stand at rupees 84.73 crores. Coming to the gross realizations per visitor for Q1 FY19, the weighted average ARPU for the theme park and water park combined in Q1 FY19 is rupees 1,486 versus rupees 1,516 in last year Q1, a drop of 2%. Drop in ARPU was directly due to the impact of GST, which currently applicable at 18%, while in Q1 FY18 the service tax was 15%. The theme park ARPU for Q1 FY19 is rupees 1,820 versus rupees 1,880 in last year's Q1. This is lower by 3%. While the water park ARPU for Q1 FY19 is rupees 1,261 versus rupees 1,250 in last year's Q1, in fact an increase of 1%. Thus the EBITDA for Q1 FY19 is rupees 34.14 crore versus rupees 32.23 crores in last year's Q1, registering a growth of 6%. The management efforts continue to drive footfall as well as improving our margins. And as Dhiman mentioned, this quarter registered the highest EBITDA margin ever at 40.3% versus 37.2% in the corresponding quarter last year. Coming to the hotel performance, I think Dhiman has covered already in detail. The cost-related highlights I would like to inform as follows. The overall Q1 operating costs, including hotel, have declined by about 7% compared to Q1 FY18 from rupees 54.39 crores to rupees 50.59 crores despite inflationary pressures. The decrease in cost was primarily driven by lower material costs, optimized transportation costs, as well as lower power and fuel costs. The finance cost for Q1 is rupees 32.14 crore versus rupees 31.97 crores in previous Q1. The increase primarily due to some borrowing increase to meet the cash flow gaps presently. The loan outstanding as on 30th June 2018 is rupees 1,030 crores. We would now like to open the floor for any questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Any participant who has a question may press star and 1. We have the first question from the line of Pankaj Jain, an individual investor. Please go ahead.
Hi, sir.
Hello.
Hi, sir.
Yeah, hi.
So I had a couple of questions on land and hotel deal. So I would like to know when is the likely closure of the transaction expected for this deal? Is there any ballpark timeline?
Yeah, so as I informed, we've got a couple of NOCs, including the critical NOC from the lead bank, which is unfortunately delayed because I think the PSU banks themselves are in a tumultuous time over the last few months. We do hope that both transactions, considering the large number of consortium lenders, get concluded in one more quarter. So basically, the practical target would be Q3.
Okay, so Q3, in the Q3 it would be most probably it should close in Q3, right?
Yes.
Okay. And sir, how will these transactions impact our financials for FY19 in terms of interest cost savings, operational cost savings, or say debt outstanding? What would be the position in that angle?
Yeah. So on a full financial year, we were looking to save about 41 crores of interest costs had these deals happened at the start of the financial year. Unfortunately, if we take out 2-3 quarters, the benefit will obviously be significant in the next financial year, and maybe 4 months of this financial year we could get the pro rata benefit. That's the interest cost. On the operational cost, because hotel revenues would also go up, so I would like to comment maybe some marginal savings in say land taxes due to the additional land being sold off. And so FY20 would be the key year to look forward for the significant reduction in cost, while the debt outstanding is expected to come down from 1030 crores to around 750 crores.
Okay, 750. Okay, so maybe the full year impact could be in the FY20 and the 4-5 months impact would be in the FY19.
You're right.
What we...
Yeah.
Okay. On financials, sir, when should we expect that the company to achieve a break-even, at break-even?
So PAT break-even, we've just, in our investor presentation, we've given a guidance for FY 21-22. And while cash break-even will be achieved in FY20 as per the current plan, the PAT break-even, because of the depreciation, being the high capital expenditure, has been incurred on the rides and equipment. So FY 21-22 would be the year for a PAT break-even.
Okay. And sir, what are the new initiatives which we are taking to increase the footfall? As well as if you can share the number of footfalls for the month of July.
Yeah, so with regards to new initiatives, we have launched Imagica High Street as a new product. Now this is a completely new thought from the team, wherein which we've said that it opens up a completely new genre and reduces the entry barrier for people. So one thing that we've seen is that for guests and people in India today, to understand theme park as a concept is a slightly longer phenomena as compared to an amusement park or a water park, which they are used to. So we believe that inducing trials is what will essentially convert into sales and repeat visitation thereafter. So we want more number of people to enter our gates and experience the beautiful property that we built and the world-class product that we have built. So therefore, it is essentially how you would sample and get more people to try our product is exactly what our effort is. This also makes our base product look the best product in terms of pricing. So Imagica today offers unlimited ride offering at this price, which many times we have realized that people do not get it in the first instance. So these are two big efforts that would help us drive footfall from the normal base. Apart from that, there is a major effort that keeps happening on the schools and the corporate business, apart from driving numbers for destination weddings as the business. So one is logically getting the normal customers, the organic visitation, and the others are more segment-oriented visitation that we continue to work on. The efforts on corporate business have significantly increased this year, and we believe that should help us drive numbers in a decent manner.
Also, we are sorry.
Yeah. I actually wanted to know any number of footfalls for July, if you can share.
As of now, we would like to share. However, just to give a sense, despite 15 days of July being absolute downpours in this region, in the western part of Maharashtra, we've continued to hold fort.
Okay. Sir, my next question would be, is there any update on expansion plans in new geographies, like you were planning to expand in Delhi with a brownfield expansion? So any update on that?
So while the conversations are there and we've had quite a few outreaches from other state governments, the management obviously in terms of priority is trying to get the debt management part in the current balance sheet and get the balance sheet deleveraged sooner than later. And the next step for expansion and monetization of the brand and the IP and expertise that we have will surely happen. With minimal capex, how we can go across to newer geographies is what we are continually working on. And so that you'll get updates soon. I think in FY20 or if we are looking forward to at least initiating work on a new geography once our debt management takes through.
Okay. Thanks a lot. That would be all from me. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. Anyone who has a question may press star and 1. We have a question from the line of Sunny Agarwal from PNB Investments. Please go ahead.
Thanks for the opportunity. Sir, my question pertains to, are we looking to rope in some foreign brand or foreign partner who is willing to join hand with us and be our partner for next 10 to 20 years? So your thoughts on that? Thank you.
Yeah. I think for the last couple of years, we had engaged EY because there is foreign interest to come into India. However, considering the lack of government support, not many foreign players are really keen to enter this space. And Imagica, being the pioneer in the theme park space, obviously has made a name and a destination of world-class standards. So there have been various outreaches, and so far, because of the higher amount of debt on the balance sheet, I think conversations were not moving ahead. But as we go ahead and with the debt reduction that is proposed, you may expect some conversations to go ahead, and we would be open to strategic partners coming in to help us expand this brand into a few other geographies in the country. And because we really believe in the potential of this space, and we've seen examples of China where I think last 4 or 5 years have seen several big theme park launches, and considering that our demographics are similar to China in terms of spending propensity and the desire for the entertainment. So I'm sure in the coming time there could be some discussion that could go ahead.
Okay. Thank you, sir. All the best.
Thank you. Our next question is from the line of Vishal Sampath, an individual investor. Please go ahead. Sorry, the name is Vimal Sampath. Please go ahead with your question.
Yeah, actually most of the questions are now been covered. Now just one question. Have we been able to, leverage on our SOH? We have so much of, park is such a big area. Are we getting any revenues on this front now?
Yes, sir. So it's a very interesting question, sir, first of all. So we have, first of all, started to monetize spaces which were built mass spaces which we have started to lease out. So that is one aspect of SOH that has got kicked in. Also, this quarter itself, we have been able to make a good breakthrough on advertising SOH as well. So we have clearly focused on this area as we have discussed in last 1 or 2 calls, and this has a focused target as well as the effort to drive numbers.
So can you give some figure? What revenue have we been able to generate?
Yeah. So in the Q1 we have almost 46 lakhs of revenue out of rental plus SOH income from this segment.
Okay. And what about your space for retail? Have you been able to do anything on that?
Yes, sir. So we have, like I told you, we have given some of the concepts on rent, and that's where we earn, and that is over and above the number that I told you, sir. So that is a rental income, yeah.
Yeah, so so rental income is apart from this 46 lakhs?
Yes.
Or it is yes, that is apart from that?
Apart from it, yes.
Apart from that. Okay. Thank you.
Thank you, sir.
Thank you. Our next question is from the line of Prachi Dave, an individual investor. Please go ahead.
Yeah, hi. Thank you for taking my question. Pardon my knowledge, but I would like to understand how this debt plan is going to work because of the hotel debt reduction. So will we get any revenue from the hotel or it will stop?
Yeah, so on this, ma'am, once the hotel is sold, there will be no direct revenues that we will get, obviously, because it is a change of ownership. However, there would be alliances through which we can get certain commissionary income that we can get. So like we tie up with any other hotel and there are benefits, that's the same arrangement that would continue.
So like you would take your customers to them, so they might give you like 5% or so commission.
Exactly. And yes. Hotel gets aided a lot because of the park as a property, and therefore a lot of people stay in hotel today because there is a park of our size and stature next door. So these arrangements can always be worked out, and we see that as an opportunity as well.
So have we already debated on the number, or it will be worked out?
No, ma'am, these are early days. It will depend on what is the kind of packages that we arrive at. But it is a rather done thing in the industry, so it is not something which is very complicated to do. So we would embark on it at the right time.
Okay, perfect. Thank you.
Thank you, ma'am.
Thank you. Our next question is from the line of Vimal Sampath, an individual investor. Please go ahead.
Yeah, one follow-up question. We were having these night events. So what is the outlook on that? I mean, have we tied up with some event managers? What is the situation now?
Yeah, so Imagika by night, Imagika High Street are concepts that we had said that we would be promoting. So we did the anniversary bash this quarter, and we think we also did a small event. We have figured out a template which is not a very heavy production cost event, and we think that these events have been classified into organic and inorganic in nature. So organic is where there is a logical customer demand and they are looking out for avenues to go out. Those are the events which we'll be making it mega scale, whereas the events which are inorganic, we would work on a tight budget, typically like what you see in Bollywood, wherein which is a blockbuster, high star cast movie versus a low budget movie but rotates faster. So that's exactly the model that we are employing. You will see some action in this genre in Q3.
Okay, and this tent thing is concept as what?
Yeah, tent as a concept has also been successful, and we would again be doing this in Q3. Q2, because of monsoon, we do not do that for convenience and safety reasons.
Right. Thank you.
Thank you, sir.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Deepak Malhotra from TPG Consultancy. Please go ahead.
Yeah, hi. This is a question on the competition. There have been some news reports that Qtr1 International India, in partnership with Raj Green Group, is going to set up a new park called Amazia sometime, but in Surat in this year itself. Any comments on the same?
So Amazia Water Park is already operational since last almost a year, and we also, like you are hearing, that the amusement park would come up. So only comment that I can have is that more the number of players, higher is the push to the category, and it will only improve the opportunities for Indian customers to experience outdoor recreational activity, which really is the need of the hour. So we welcome them with whole heart.
We have also tied up with Chota Bheem, which is a very popular character. I think Turner also, So Turner also enjoys some characters which are there. But
I'm sorry, I didn't get the question on the character part. We were not very audible, unfortunately. So having character integration in an amusement/theme park is always a welcome thing, and it would improve the experience of Indian consumers world over, this is a phenomena that really holds fort for every park owner, and everybody looks for tying up or having a good association, and that is exactly why we had got Chhota Bheem on board, and we are in fact open to other players as well, and it is really the way to go. So we completely support Ameja's initiative.
Because Turner has got such theme parks in Pattaya and Dubai, as per the public information available. So my question actually is, while I do understand that it will basically give a fillip to the journal category, journal, but how would it play on the competition part? Because
no, sir, it won't really. So it is always that whenever such new introductions happen, it adds value to both the players. In fact, people who do not have characters get an impact, and the size of the business is such that one or two parks cannot really take away each other's business. In fact, because they will talk about it, we'll talk about it, it grows. So generally in retail, you would have always seen that 2-3 brands showrooms are next to each other, but they don't take away business from each other, but they drive more footfall to that base, and that's the same phenomena that would happen. And because Surat and Mumbai are not so far, people would in fact flock in this region, and that works better. That's the same thing that is happening on Mumbai-Pune Expressway today. It is helping everybody.
Okay. My second question is in terms of what is the outstanding debt on the balance sheet. And although, again, some of your plans have been in public in terms of trying to reduce the same, could you just kindly give an update on the same, please? Thank you.
Yeah. So as I mentioned previously, the total loan outstanding as on 30th June is 1,030 crores. And post the asset sale envisaged, we anticipate the debt to come down to 750 crores. And so that's the latest number.
There was also a talk of raising some money from private equity, getting a strategic partner, although you did mention about that you are open to a strategic partner. But have discussions really moved at a serious level on that?
Discussions and interests are there, but I think post the asset sale and post the debt coming down by 30-35%, and at that point, I believe the discussions have a potential of moving forward, because as I mentioned previously, India as a market, global players would not ignore for long. I think they would not be really looking forward to greenfield investments, considering the various government approvals and the roadblocks in developing such large projects. So I'm sure in a year or so, the conversations will move ahead.
One last question. Sometime back, in terms of your Vision 2021, you had indicated certain targets which you could achieve in terms of footfalls, EBITDA levels, and so on and so forth. So how are you on the path to achieve the same?
So you're right. I think we've laid down aggressive targets, and we've taken up the challenge and come up in an investor presentation ourselves. And we really believe with the level of current capacity utilization and the level of activation in the current market, where just even mentioned we have only touched 17% of the addressable market. So there is really room for improving footfalls. And being a high operating leverage business, any incremental footfalls would really 85% straight flow to the EBITDA. So all the efforts today are really towards driving the footfalls, and there is a huge market in terms of a primary market as well as a secondary market waiting for us. And I'm sure with all the initiatives that we've taken from the customer's perspective to improve the offerings, to improve access to the park, I think we'll be on track to reach there, and if not exceed those numbers.
What is really the impediment, to go for a little exponential rise? Because now, we have been in the market for last 6-7 years, I mean, it's really well established. People are now well more accustomed to the idea of going to a theme park, and there are others too in the competition, who are doing quite well. So what it beats me that when you have the best product available in the country and you are located in a suitable geographic area, why we are not able to increase that in spite of the management's best efforts, sir?
Yeah, so I think it is really the delta of tourism that really is the gap, really not the catchment activation. If you see the way catchment has responded, in fact, almost 7.5 million visitors in 5 years is really, by any standards, not a small number. And in fact, whenever we talk to industry professionals nationally and internationally, they really applaud that the kind of numbers that Imagica has been able to drive. So one thing, if you look at places such as Orlando or Singapore or Hong Kong, which are so propelled by tourism, that where the government and the private bodies come together to make an ecosystem that is very conducive for people to travel, and there are shops available to private players to generate tourism. Somewhere that factor has not yet kicked into MTDC and Maharashtra government as well, and we in fact would want to make more serious efforts there, although we have been trying. That's really the delta. So if you see today our outstation visitors, so if you take Mumbai, Pune, Gujarat and the rest of Maharashtra out, it's almost 14% of our visitors who come from national visitation. So Imagica is a national product, and it's not only a Mumbai product or a Pune product, and that's something where we need to go to. So technically, if you put some of the players in the amusement park businesses, they have 2 to 3 locations, and their number on revenue or footfall is almost around our one location. So it talks for itself. But the important thing is kicking in tourism in a bigger way, and that's really the area which we have to go after.
Okay. Thank you. Best wishes.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference back to the management for closing comments. Over to you, sir.
Yeah, thank you very much for participation, and we look forward to get in touch with you on the next call. If you have any questions in the meantime, you can feel free to get in touch with us or our investor relations company. Thank you very much.
Thank you.